Hello, everyone. Thank you for joining us today. If you have any questions for our panelists during the presentation, you may enter them into the chat or the Q&A panels. We'll read those out for you. Or if you're feeling brave, use the raise your hand tool, and I will modify your controls so you can unmute your line and ask it live. But without further ado, I'm going to turn it over to our MC, Mr. Tom Berkler.
Thank you, Lisa. And one of the caveats, Lisa, you forgot to put in there is if they raise their hand, we don't want any hard questions today.
I forgot to add that. I do apologize.
I used to do a lot of live seminars back when I wore a younger man's clothes, and you'd get questions from the audience, and I didn't know what the answer was. And so I would always say, look, there's been a lot of new law on that lately, and we'll get back to you. And I'd leave, and they'd never see me again. So
that's a good point. I like it.
Folks, thanks for joining us. I know you're looking around and you're thinking, given the number of people on the screen, it's pretty slim pickings today. Well, I assure you that that's only with regard to quality, not to quantity. But Matt Anderson, who's one of our regulars, is not here today because he has committed to single-handedly build an entire community for Habitat for Humanity. Wow. So he's not with us today. He's out building. Our annuity team isn't with us today because the good news is that with the interest rates where they are right now, they're so attractive that they are just consumed. So Lisa, as we talk, I wouldn't mind if you wouldn't put the contacts for our annuity team up as well, because there are so many people that are taking advantage of the higher interest rates. And our three folks, Scotty, Seth, and our new addition, Justin, are very adept at not only helping you get a new annuity, but demonstrating to you how you can effectively, on a tax-advantaged and without penalty basis, start moving money from old annuities into new ones, even though you may not be to the end of the premium guaranteed period. So if you get them up there at some point, that'd be good. Rob, did you say something?
I just wanted to add something while you're talking about annuities. And I hear this just by, over the wall talking to the annuity team that rates are changing. They're actually going down. So there's kind of some urgency there. If you're looking to get the highest possible rates for your clients, now is the time to act. Because if the Fed cuts rates again in September and maybe again later on in the year, it could go even lower. So.
Yeah. And I'm not a master economist, but I read today that the Labor Department overestimated the creation of jobs this year by about 800,000. Now, that isn't a missed it by that much. That's a big number. All aside, with regard to the reliability of the Department of Labor, my understanding, Rob, is that adjustment will affect the Federal Reserve's opinion as far as possibly lowering the rate as well. Yeah. So that goes in there. So, Rob, you and I are having a good conversation here, but poor Steve, he's sitting out there on the bench,
taking it all in.
He's over there at the scorer's table waiting to come into the game,
waiting for the next dead ball situation.
Yeah, Steve, Rob and I tend to do much of my work with the life department, but I work closely with you and Tom and DI as well. Rob and I are very familiar with all of the limitations sometimes that are put on the ability to get life insurance because maybe of what you do in your occupation. In fact, you and Tom are much more sensitive to that because carriers are much more hesitant in certain occupational areas to give disability insurance. And you and I were talking before the show started that the curtain maybe is being pulled back a little more on that. We now have a lot of occupational areas where clients can potentially get disability insurance where they couldn't in the past. Yep. And if you could kind of shake us up a little bit here, especially those of us who don't deal with DI as much, that tend to think that if somebody's in a certain occupational area, maybe it isn't worth our time to come to you or Tom. Enlighten us on that a little bit.
No, you're exactly right. When most brokers and advisors think of individual disability insurance, or as we prefer to call it, income protection, they think of doctors, they think of dentists, attorneys, and executives, kind of this higher wage earners, more the white coat, white collar. But there's still a lot of individuals, self-employed business owners in blue collar occupations, gray collar occupations that, they work hard, they make a good living. And a lot of them don't have any coverage. If something were to happen to them, they couldn't work due to an accident or sickness. And we've had a lot of success recently with these blue and gray collar occupations. Matter of fact, here in the last couple of weeks, we submitted an application for a truck driver that's self-employed, makes a good living, no coverage. A real estate broker, 1099, self-employed, makes a very good living, no coverage. Owner of a pool service company, and he actually does manual labor. Business owner, couple employees, no coverage. And also a dental hygienist that she's a W-2 employee, but the dental clinic does not offer any coverage. So we're kind of thinking outside the box. If you have any clients in these type of occupations or outside the white coat, white collar, have that conversation with them. What would you do, Mr. and Mrs. Client, if you couldn't work, if you lost your income for 3 months, 3 years, for the rest of your career? What would you do? I think they'll appreciate you reaching out to them and having that conversation.
I notice, Steve, that you're calling it gray collar.
Yep.
And I suppose the little guarded language there is, hey, the doors aren't wide open yet,
Right.
but there's more light there than there used to be.
Yeah, they might bang a nail every once in a while, but not all the time. So they're, kind of quasi blue, but they're not the white coat, but they're not digging ditches either.
Steve, you mentioned the real estate, who was a broker who was on. That surprises me. I thought that would have been a pretty reliable client anyway. What's the difference there that was kind of something you would bring up?
I think the biggest thing is brokers just aren't reaching out to their clients that are in the real estate. They just, just don't have that conversation. But we bring it up all the time. It's a good risk. We have a few carriers that really specialize in more of that market. They make a good living. Sometimes it fluctuates a little bit. So when you're self-employed, what the insurance company wants to know is your last 2 years of reportable income, but they make a good living. Something happens, they can't work, their income is gone.
You mentioned a truck driver as well.
Yep.
Is the hesitancy maybe in the past for truck drivers the dangers of the job, or what's kind of kicked it open there?
I think once again, the big thing is establishing the need for coverage, and brokers just aren't reaching out to people to have that conversation.
Yeah.
There's a lot of these individuals that have no idea that this coverage is available. They say, well, if I'm disabled, I'm going to qualify for Social Security. We know that's very tough to qualify for. Don't rely on that. It's good that we have that safety net, but we have ways to give these people protection, give them coverage, adequate coverage, but still fit within their budget. They could make a lot of money, but everybody's got a budget. And Tom and I will work with a broker to design a plan best fit their needs and best fit their budget.
Yeah. You and I didn't kick this back and forth before we started. So if I catch you short here, I apologize.
That's fine.
You can get me in trouble after. But what would be a couple occupations you would name that maybe we tend to think, oh, they aren't going to get DI because that's too dangerous, but maybe are fertile fields for prospecting?
It's self-employed people, people
Yeah,
that run their own show are ones that, brokers don't normally reach out to touch base with. So kind of look through, your block of business, and we have a lot of marketing material, a lot of one-pagers, a lot of flyers you could send out to initiate that conversation. Because that's the big thing is establishing the need for coverage. Once you establish the need, then you can kind of work everything into place and hopefully secure them coverage.
I notice, I try to adopt your language and refer to income protection rather than disability insurance.
I like that.
But that's purposeful that I don't do that, because you don't call me by my preferred name, which is the Hulk.
Well,
I would.
I do sometimes.
Yeah, there's a two-way street here, Steve. Speaking of two-way streets, that's the only two ways we got to go. Rob, you and Steve today. Rob, you and I were kicking around too before the show, this whole question of executive bonus plans between employers and generally key executives, important people in the program, and how people tend to be locked into thinking, well, executive bonus, we're talking about a life insurance policy. And the fact is that more often than not, an executive bonus plan is implemented where what the employer does is pay for a life insurance policy owned by the executive. But in many cases, you and I have worked on, the development of life insurance policies has led us to design key person, or excuse me, rather executive bonus benefit plans that cover more needs than just life protection. And you said you wanted to elaborate a little bit on that.
Yeah, executive bonus is still one of my favorite concepts. I think it's also often overlooked. For anybody on the call that has business owners that have key employees that they want to reward and retain or maybe recruit new employees, it's a great tool. But like you said, Tom, oftentimes it's really focused around just the life insurance. We're going to give an executive a bonus. We're going to fund life insurance so they can protect their family and when they retire, have supplemental retirement income. But a huge new benefit to add to that is a long-term care rider. Very affordable. Tack a long-term care rider on there. Now they've got 3-in-1. Their family is protected. They've got cash value that they can dip into in those retirement years as a supplemental bucket. And then if they need it, they need help paying for care, they can turn on the long-term care rider and accelerate that death benefit to pay for care. So I think it's a great benefit to add to a executive bonus plan.
It's truly okay. So, and you mentioned that one of the reasons that executive bonus plans were good is it could provide not only death benefit protection, but supplemental retirement income. Yeah. And of course, there we're talking about the overfunded IUL type policy.
Right.
And I've heard you in conversations when you talk about adding the LTC rider, the question always comes up with the agent, yeah, but what if I need to go ahead and exercise that LTC benefit? What does that do to my cash values that I anticipated being available for my supplemental retirement? What do you most often suggest there is a solution to providing the LTC with a rider, but not hitting hard on the possibility of accessing those reserves?
Right. Yeah, that is a common question that we get or a common objection. So the simple solution is to split it up into 2 policies. You're going to have one policy that might be a guaranteed UL, GUL, no lapse UL, as we sometimes call them, with that long-term care rider. And that is solely there for that death benefit protection, and you can access it for long-term care. And then the separate policy is the IUL that you talked about, where we're overfunding it, again, using the business dollars and growing cash as quickly and as efficiently as possible. That way, if you dip into the long-term care rider, you're not taking away from the cash value that you're going to use for supplemental income needs. So split it into 2 policies to keep it simple, and it can still do 3-in-1.
We would be amiss if you've mentioned a 2 policy strategy here. We'd be amiss if we got off this show without giving you a minute to talk about the Rob Reedy triple play. I want you to talk about the case you and I discussed where basically the agent said, look, I've got 3 needs here. I've got pure income replacement that I will only need for my client till he or she retires at age 65. I want the long-term death benefit with the cash reserves, and I like your LTC rider that I'm going to add. But how can I handle that? I'm into the 2 policies, but what do you suggest as far as economizing as far as the income replacement need is concerned?
I guess I want to make sure I answer the question at hand. So we've got the death benefit, we've got the long-term care rider, and we got the supplemental retirement income need.
Yeah.
Which portion were you alluding to?
And they said, look, I would like $1 million extra up until I'm 65
for
just income replacement.
Right. Yeah, that's a simple solution. Just add a term policy on top of it. Term policies are extremely affordable. So if you need that extra death benefit to take care of the family, tack on a term policy. Now you got everything covered all in one bill.
Yeah. And something I've heard you suggest, Rob, to enhance the cash value buildup in the policy that's creating reserves for supplemental retirement is many times I think it was one occasion, the agent said, my client's willing to throw some money in on their own.
Right.
And you indicated that's almost like you're creating a Roth IRA type arrangement for them.
Yeah, it's 2 separate types of funds going in, employer funds via the bonus. And then if the client has additional funds that they want to use to put into the policy, we can design that from the get-go and just make the cash values grow even faster and more efficiently. So absolutely.
Yeah, we haven't heard from Steve Jones for a minute here, but Steve, I'm going back to describing an executive bonus plan as a pile of cash that is available to provide the benefits needed by the client. You and I have in the past talked about the fact there's nothing that's keeping them from taking a portion of that and buying a disability or income replacement policy for the client. You're still on mute there, Make sure we repeat, Steve.
Yeah.
I don't want to miss anything here.
Gotcha. From the top. Yeah. So let's say you have an executive and they make a lot of money and they also have some group coverage provided by the employer. But with those group plans, it usually has a cap, right? Or they might not cover bonuses and that type of thing. So they could purchase on behalf of the executive some additional individual disability insurance coverage that stacks on top of that. And what they could do is they, for whatever the monthly premium is for that individual coverage, bonus up their income. And then the insured, I'm not a CPA, but then the insured could pay for the premiums after tax. So if there is a benefit made, it'd be a tax-free benefit. But we do quite a bit of that.
Yeah, yeah. And you've anticipated the question I was going to ask, because most of the clients that you and I deal with, they buy it and they want to buy the policy with after-tax dollars
Exactly.
because they want that and because that amount paid by the employer is reported on the W-2, then they automatically have access to an income tax-free death benefit.
Yep, they just pay for it after tax.
Yeah,
tax-free
that's
benefit.
good.
Yep, which is key.
Yeah, and we don't have the annuity team on here today, but I know Scott and Seth and I have worked on situations where part of that executive bonus money went into an annuity. There's nothing that keeps the executive from including an annuity element in their policy as well. Is there any closing thoughts here, gentlemen, before we quit for the day? Lisa, do we have any? Oh, go ahead, Rob.
I was going to add a fourth benefit to this executive
Sure.
benefit, which is healthy rewards. So one carrier, many of you are familiar with, John Hancock, you can add their vitality rider and provide that executive with benefits for living healthy. One of which includes a cancer test that can detect 50 previously unscreenable cancers. That's $1,000 value.
Wow.
So they can potentially catch something early and treat it and beat it. So those healthy reward benefits can be a nice add-on to an executive bonus plan.
Rob, give me what's the amount of insurance you've got to buy in order to get that free $1,000 screening test?
It's relatively low, 500,000, and you have to be age 50 and up, which is usually when many clients and individuals will start taking certain types of cancer tests like colonoscopy. So 50 and up, 500,000 or more, you have access to the Grail test. And again, 50 previously unscreenable cancers to hopefully, if you've got it, find it in stage 1 so you can treat it and beat it.
What's the name of that test?
It's called Gallery. The company is Grail. Yep.
I do that because folks can Google that and find out that we've got a respectable, legitimate front and center test that's used in the medical industry here.
Right.
Rob, I know you're a big proponent of the Vitality program and that you own a life. John, there's other benefits, including the fact that if you carry out certain regimens of physical exercise, you can get lower premiums. If you maximize that opportunity, how much of a percentage in premium drop could you experience? Just an estimate off the top of your head.
Somewhere between 10 and 15% premium discount over the years. Yeah, so there's that. There's also all kinds of other cool rewards like Apple Watches for $25, discounts on hotel stays. All kinds of benefits for doing anything you can to live healthy. They're going to reward you for it.
You recently took your family to Hawaii because of your ownership of the John Hancock policy, isn't it?
Half off.
Steve, do you have any closing comments?
Yeah, we'll be here if you guys ever need any assistance. Think of us as your back office when those opportunities present themselves, and appreciate your time today.
Yeah, and the thing I continually emphasize here, especially DI, because most of the agents I deal with have a working knowledge of life insurance.
Yep.
But with like income replacement, they don't deal with it as often. Yep. And I tell people, maybe I'm hanging you out to dry, Steve. I say, that's Steve fine. And Tom will do it all. Just call.
Exactly. We're having a lot of success with those point of sale. Let's say the broker has a client that they know they need the income protection. They just don't have the time to reach out to the client to initiate the conversation, or they just don't feel comfortable having the conversation. Just make the introduction to Tom and I. We take it from there. We prepare the proposals, take the application all the way through underwriting and policy delivery, and you still do receive a commission on a commission split basis. Have a lot of success with that. Yeah.
That's great. That's great. Thank you. And Lisa, I ask again, any questions in the box over there?
No, we are clear on questions today.
All right. Well, I just want to remind the folks for you to take us out of here, Lisa, that things are so beneficial here where we work that our saying is a bad day at CPS is still better than a good day anywhere else. Close with that.
Bye, everyone.
All right.
Oh.
Thanks
See you
for
guys.
joining us, folks. Hope to see you next time.
Thanks for your
Thank
time.
you.
Take care.